This is Prince Dykes. This is the Royal Financial Investment Group. As always, thank you guys for tuning in to another great, awesome video. As you guys can already see, this is going to be a video of Amazon 4-quarter earnings prediction. So don't forget to like, subscribe, share, comment, tell your friends, all the good stuff, or whatever you want to do with it. And thank for everybody that's already doing it anyway. But I don't have a lot of time, so let's jump straight into it. First of all, let me throw out a disclaimer. Let me let you guys know that this video does not contain any investment advice. This video is just for educational purposes only, educational and / entertainment purposes only. It's not to tell you guys what to do. Don't want to be misconstrued with what to do, how to do it. I'm telling you anything and nothing like that. I gotta throw that out there, right? If you want to take it, you want to do something with your own investment, invest at your own risk. But I would advise you to do your own analysis and to seek out the help of a professional. Anyway, so now that's out the way, let's jump straight into it. So Amazon. So what do I think of Amazon earnings? Just look at the landscape. If you look at one of my old videos, if you're a true follower of mine, you've seen some video that I made some years ago when oil very first started dropping. Gas was going for about $4 a gallon back in Hawaii, where I live. So I said, well, I didn't say anything, but when gas prices start to fall, when oil prices start to fall, gas prices start to fall. And then I said, well, gas prices are pretty low right now compared to what they used to be, which means that Americans are saving so much money that they're not spending it on gas. They're saving so much money. Because think about it, I used to spend about $200 a month on gas just on an average commute. Gas prices got cut in half, which means that I was saving $100 a month, which is $1,200 a year. You multiply that times 2 people in a household, that means households probably seeing $2,400 a month, right? So what did they do with that money? Did they save it? Did they invest it? Or did they spend it? I predicted that people would spend it, and I predicted that we'd spend it on retail. But now, due to things like mass shootings, due to things like Walmart closing stores, Best Buy, all this other stuff that's going on, you got the mass shootings going on, you got store closures going on, then you got the raise the minimum wage issue going on, which is going to cut into companies' operating expense. So, just due to their payrolls. So I said, well, that if people are not going to go to traditional retail, what is another form of retail? E-commerce, right? Everybody's going online. Everybody's buying everything online. Now, out of the blue, due to technology, Cyber Monday. It's not only Black Friday, standing in line. Why would I stand in line in the cold? Got mass shootings going on. All this other stuff going on when I can just sit at the comfort of my own home in my house slippers and I can just click online on Monday and get all the same great deals I would have got if I was stood outside. And people, we're lazy. Anything that makes our life easier, we're going to do it. So I think that the 4th quarter for Amazon, which is the biggest quarter, they're projecting $39 billion in revenue, which is the biggest quarter. I think they're going to see a bump, and I think they're going to beat people's expectation for that reason. I look at other people in the industry. Look at Walmart. Look at Best Buy. Look at Foot Locker. All I see is store closure. All I see is strikes, employees' issues, or whatever. Look at Amazon. They only employ 200,000 employees versus Walmart, who employs 2.1 million employees. So now that I have less employees, I can pay them better because I'm more efficient. And look at Amazon. Amazon is a website. That's all it is. Take me, for example. I'm the author of the book Wesley Learns to Invest, which is sold on Amazon. Amazon didn't write the book. They didn't publish the book. They didn't do anything. They're just a retailer. They don't even print the book. All they do is say, hey, guess what? Someone came to our website and ordered this. Can you print one and send it to them? So guess what? That's straight profit. And they're the #1 bookseller. So it's kind of obvious to say that you have a very low overhead. Now, the bad part that I want you guys to keep in mind, Amazon is very, 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 very overpriced, which is going to make it a very volatile stock, which I'm predicting that the stock will go up, but this stock can tank, and it can tank hard because it has a PE ratio of 6 to 800. And it takes a lot for a stock to rally. Earnings per share has to be right, revenue has to be right, the outlook has to be right, your estimates have to be right. You have to stay on track or even go even higher, or what you estimated for 2016 to be right. But all it takes is for you to miss revenue or growth to slow, or your year to year ratio to slow, and the stock will tank. And if Amazon tanks, it's going to tank hard. So now, but if it rallies, it's going to rally strong. I'm projecting between a 6 to a 10% move in the stock come tomorrow night after the market close. And also that what are ways you can profit from this? Well, I want to give you guys a little bit more analytics without digging too far into the dirt or whatever. First of all, comparing the industry. Second of all, looking at all the speculators out there. Everybody is excited about Amazon. Amazon is a baby compared to a company like Ford. For example, I have a 4-year-old son, Wesley, right? A kid in his first 4 or 5 years is going to experience the most growth. I'm not a doctor or nothing like that. But a kid can go from a baseball to a 5-foot little boy in 4 or 5 years. Me at the age of 31, I'm not gonna grow a foot or two over the course of the next year or two, or the course of the next 4 or 5 years, because I've done majority of my expansion and growth at a young age. So when you look at a company like Amazon, yes, it's been around since '94, but it's in an expansion phase. Everybody's excited about Amazon Prime. People are excited about the Amazon Prime with the numbers of subscriptions. That's going to be a big one. People are excited about their platform, the way they're moving, the way they're doing things. They're talking about going into their own delivery service. All these great things they're talking about doing, and when you look at their revenue, is going higher and higher and higher because Amazon is a baby phase. It's growing fast. Versus somebody like a Ford, who's been around for 100 years, it's done majority of its expansion. It's already overseas. It's already international. It's already domestic. It already has stuff out there. So it's not going to be that new hot, sexy stock. Versus investors, if people don't trade off of logic. They don't trade off of what makes sense. They trade off of what they see, what they feel. That's why Amazon has a 600 to 800 PE ratio, which is crazy, which means it's very overpriced compared to what its revenue is. It has less revenue than Ford, but it trades way higher than Ford. What reason? Not a genius. I don't freaking know. People buy what they want to buy, which means that anything Amazon puts out good, they're going to trade the stock up, 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 up. Now, how am I going to profit from this? How do I plan on playing Amazon? I'm going to make an investment. According to Benjamin Graham, the godfather of investing, Warren Buffett mentor, he says investing is covering the downside, doing your analysis, 1. 2, making a nice return, 3, covering the downside. So what I would like to do is a 4-to-1 ratio, which means that 4 times whatever I put into on the put side, the downside, I would bet 4 times on the upside. So if the stock does tank and it tanks hard, I can at least get my initial investment back. Versus if it does what it's supposed to do, what I guess it will do, it will go up, so I'm protected either way. So it's that, hey, you can say, hey, what type of investment would you don't want to make? Well, why wouldn't you want to make this investment that, hey, I can make 200, 300, 400% return on profits, or I can make my money back? The worst is if Amazon sits still or that it's very choppy. If it's going up, down, up, down, up, down during the day, which I don't predict compared to its past performance, that can make a position of something like a modified straddle very unprofitable. But anyway, I gave a little analysis. I gave you guys what I plan on doing. If you want to be a straight speculator, if you don't want to cover yourself on the downside, if I had to pick one side, I'll probably pick the call side. But me, I'm covering myself on the downside. But anyway, I hope that's profitable. I hope that we'll see how it comes. I can't lie about the numbers. This video is already going to be out, published. You guys can better hold me accountable, laugh at me, say if I was wrong, or tell me if I was right. But anyway, thank you guys for tuning in. Don't forget to like, subscribe, comment, and share. Until the next video, you guys already know what to do. Peace. Be safe.